Amit Kumat, the MD and CEO at Prataap Snacks, joining in. Amit, hi, morning. Good to have you on the show. Out of the 17% top line growth, how much did your own portfolio grow and how much did Awadh grow in Q3? If you could just break it up for us.
Our portfolio grew by almost 17.5% and Awadh by 16.5%. It's almost similar. Both the portfolio grew at the same rate.
Okay. There's been an unusual spike in palm oil prices and higher food prices, which impacted the margins as well. Do you think the pressure is going to continue in Q4 as well? And will it halt your relatively decent margin expansion trajectory then?
There was a lot of pressure on palm oil basically from last 1.5 months. It has almost increased by 35%. The 62 rupees oil is currently trading at around 85 rupees. I think there would be some pressure on palm oil for this quarter. But going forward, it should improve. The next year, I see there should be definitely a slowdown in the palm oil prices. The current palm oil prices because of the international pressure on the palm and a China effect of the coronavirus.
So, unseasonal rain had also ruined the potato crop along with several others. Was there any major availability issue during the quarter?
So there was some availability issue last quarter, which has basically slowed down the growth a little bit. Otherwise, we could have done even better than 17%. But the biggest pressure has been the palm oil prices, which has affected our margin quite a bit.
Okay, and what percentage of your total production is now via contract manufacturing? How much is in-house? You're expanding in the west, the south, so can we expect more contract manufacturing?
So we have around 14 manufacturing facilities right now, out of which 9 are third-party operations. We don't intend to increase the third-party operations right now. Around 20% production comes from third-party operation, and I think the pace will increase, it will improve further because we want to be closer to the market, which can reduce our transportation cost and the logistic cost.
Awadh has already reached about 100% capacity utilization. Any other capex plans lined up?
Very little capex. We've already done the capex. The capacities will be on probably by next month's time. So we'll have 50% increased capacity available in Awadh for next year.
Customers have been down trading in products and opting for smaller packets. So, do you see an increase in that, a significant increase?
No, I don't see any significant increase in that.
Okay, so what about... Go on.
Overall, the markets are not that good. The rural market is not behaving the way it should have done. I see some good activity in the rural market from the next year. So things should improve. But we are still focusing on our lower margin product, lower MRP product, sorry.
Okay, and how did the sweet snacks category do? What's the margin there versus your other savory products? What are the plans to ramp up the segment?
The margins in sweet snacks are much better than the savory snacks. Currently, we are run rating around 5 crore a month. And we hope to have increased around 40% in this category for the next year.
And with consumers becoming more health conscious, opting for healthy snacks, are you looking to widen your portfolio on the health food side?
I'm very not hopeful on the health side. Basically, I think people talk a lot about health, but they don't eat health in India.
Okay. All right. So what sort of growth then can we expect for the rest of FY20?
Healthy double-digit growth.
All right. We'll leave it there then. Thanks so much for joining us.